Good morning, traders, and welcome to the live stream. My name is Charles Gough. I come from a community called Pirate Traders, where we are focused on the ES, the NQ, and how they move through the two-way auction process. If you don't know what I mean by the two-way auction process, that simply just means the way we analyze the market and we look for opportunities to take trades is based on the competition between the buyers and the sellers. We're always trying to figure out who's in charge of the market, meaning who has more momentum. If the buyers have more momentum, we want to be going long with the buyers. If the sellers have more momentum, we want to be going short with the sellers. And so we have this elaborate system based on longer time frame analysis, market profile, which is what you see on the left side of the screen, market internals, and then Bookmap. Okay, and if you're here watching this video, you're probably already familiar with Bookmap, but I will walk through different ways that I use that platform here today, and I'll also give you insights on the other stuff that I use for my analysis. So to start things out, I want to do what we call the top-down approach. So that is basically just starting on a much longer time frame and then working our way to a lower time frame. What a lot of people don't realize is that if you start with a longer time frame analysis, you can often understand what's happening on a shorter time frame more easily. Okay, the longer time frame makes sense of more randomness on the shorter time frame. So if at whatever time frame you're trading, whether you're a scalper and you're taking trades minute by minute, if you pay attention to what's happening on the multi-hour time frame, you'll understand what's happening minute to minute better. And if you're an intraday trader, if you watch what's happening on the multi-day time frame, you'll understand what's happening intraday better, and so on and so forth. So we start off the week here looking at all the time frames from monthly down to kind of clear our minds and get some perspective, because things change, right? And even if what was happening last week, even if we think it's going to keep happening this week, if we take a look at it from the top-down approach, we might realize we are wrong. And today's a great morning for that. If while you guys are watching the live stream this morning, you have any questions for me, just go ahead and throw them in the chat, and I'll be happy to answer your questions. Also, if you are watching in the Discord, you can leave your questions there. I see we got Trader and Dan hanging out this morning. So if you have questions in the Discord, let me know there. If not, ask them in the chat. Okay. So looking at the monthly time frame, there's not a lot to take away from this other than the fact that it is neither bullish nor bearish. Okay. You can see the monthly candle this month is inside last month's candle. So we have not made a lower low on the monthly, which would be a sign the momentum is over on a longer time frame. That would tell us we're looking for a larger correction or even bear market. But right now we're still inside last month's time frame. We haven't made a new high yet. We haven't made new all-time highs this month. So that's a little less bullish, at least for now, right? We're only a week, less than a week into the month. So, that doesn't really matter. But let's see how much further this thing can go. Okay. We'll zoom in and we'll take a look at the weekly. When we look at the weekly chart, we can see that the market is in balance. Okay. We had momentum. We had 3 weeks where the market was making higher highs and higher lows, but last week that changed. Last week we made a lower high and a lower low than the previous weekly candle. So that told us that, at the moment that we broke that weekly low, that told us the market needed a pullback with price. Okay. Why? Because the weekly momentum was over. And there's two ways you can balance off momentum. You can either go sideways with price, which would have meant we dipped below the previous weekly low and then came back up, or you need to balance with, that's balance with time or balance with price where you pull back. Okay. And we got the balance with price. So now let's take a look at the daily, and this is where things get a little bit more interesting. If we are intraday traders. So if you are a member of the Pirate Traders Brigade, you'll see there's a link at the top of the stream. I do these live streams every morning. And on Friday, one thing that I was talking about was this channel that we were in to the downside and this trend line, which is a very long-term trend line that we've had for a while here in the market. And I was basically saying that we were opening, if I remember correctly, we were opening like right here on the bottom of the channel. And I was saying, okay, right now, intraday, this may not be super helpful, but by the end of the day, if we have tested this trend line and we got a bounce, that would be very, very bullish, both intraday and on a swing trade, at the very least to come back up and test the upper end of this channel. Okay? Well, that's what happened on Friday. We came down there, we poked below that line for about 5 minutes, and then we came right back up. That created momentum. Okay? Now, that was just very short-term momentum. That was just sellers that were thinking the market was going to go much lower, getting squeezed as it came back up. But it lasted right into the end of the day. We actually closed with a spike up, which is bullish at the end of the day on Friday. Okay? So what did we expect the market to do? Either over the weekend or today? Well, we expected it to slingshot its way back up to the opposite end of this downward channel that you see right here. Well, guess what? That's what it did. In the overnight, over the weekend, the market made that move back up, and it is now set to break out above this channel high. So what do we do with this information? Well, first and foremost, we don't assume the market is going to open and immediately start to go higher this morning. Okay? They're probably, at the very least, going to come back and test that channel intraday today, the upper end of that channel, which we'll call just around the 6,800 area. Okay, so if it's 68.15 right now, we expect the market to pull back at least 15 points, right? And try to test that channel high. Now, what happens at the upper end of that channel this morning, which, like I said, will probably be in the first half an hour, will be very, very important to carry forward both intraday today and on a swing basis, okay? Because if the market comes back down today and it turns this into support, not only is it probably going to go up today, it's probably going to go up for days and days and days. Why? Because this channel is a form of balance. And when we break out of balance, we expect a move, right? We expect excess. We expect momentum. In this case, that would be short covering and FOMO buying. So there's a very real chance if we come back down to the 6,800 area today and we find support there, this thing could take off and trend higher today, and we could get a big trend day to the upside. The thing is, right now, we have no clue whether that's going to happen or not. We have to wait for the market to come back down to that 6,800 area and then watch what happens there to find out. If when we come back down, those buyers step in, we see that support, we see that momentum beginning to build, we don't want to wait around to get bullish. We want to get into our long trade as quickly as possible because we could potentially get a big move to the upside. But we don't want to guess at market open that it's going to go straight up because that's just gambling, right? That's just assuming we know what the market is going to do next. We want to wait for the market generated information. That is the information that comes from the chart, the actual data of what traders are actually doing to decide what our bias is for the day. And to me, that 6,800 area is a great place to get a bias, at least for the morning, maybe even for a multi-day swing trade. Okay. Now, let's say the market pulls back down to that 6,800 area, but then it doesn't find support there. It starts to continue back down. Well, that is bearish to see, because it is a sign we are still in balance. And if we are still in balance, the most likely next location for the market, it doesn't necessarily have to get there today, but the next place for the market to go is back down to the lower end of that channel, which, what a surprise, will also be another back test of this longer time frame trend line. Okay? So if we don't find support around 6,800, this market could trend down today to get back down towards 6,700. Okay, so that's just the first thing. That's that channel. Now, let's look at the chart on market profile to get a little more nuanced, a little more detailed view of where this business might take place. Okay? So we said it's going to be somewhere around 6,800. What do we see from over the weekend right around 6,800? We see a large node where the market spent time and brought in volume. So that is our first potential support level this morning, where if the market opens and it comes back down into there, it might find support and continue higher. But what if it doesn't? It turns out there's actually a lot of support in here, just below that area. Okay? So this is the cumulative volume over here on the left. This is the volume from the last few months combined together. And we can see the market has been doing a lot of business in this area in the past. So we basically got support around 67.81 and then 67.66. Okay. So those are all levels where the market could come down, find support. And if it does, we could start a trend day to the upside. But we can't lose sight of the gap. So every time the market has a gap, and the gap is, I define the gap as from the high of Friday's regular trading hours range. So that's, between 9:30 a.m. and 4 p.m., that range, whatever was the high of that range, which in this case is 67.56, okay, to whatever the opening price is on Monday morning. So that's our gap. Anytime you have a gap, that gap is always a magnet that is pulling on price. Okay. So this is just a magnet down here that is saying to the market, hey, market, wouldn't you really like to come back down here and fill this gap? Normally, if we got a gap fill, we would look for that to turn into support. And we would think this thing is going to keep going to the moon. But because that gap fill will also be a look above and fail of that channel high, today, I would not be looking to buy that gap fill. I could short and take profits there, but I would not want to go long there. If this market comes back down inside this channel, I do not want to go long because the higher probability, as I said, in the days ahead are that we're going back down to the lower end of the channel. So if I'm going to buy this morning, what I need to see the market do is I need to see it pull down to one of these support areas, find support either around 6,800, in which case I could buy as it comes back up through the opening price, or find support at one of these levels down here and then come all the way back up to the open. And I'd have to watch it cross through the opening price before I'd be willing to go long. And you might think that's a silly thing to do. So you're saying, Charles, you're going to let this market drop, 60 points. Maybe you catch a short on the way down. You're going to see it find support, but you're going to need to come all the way back up another 60 points before you're willing to go long? Yes, because the danger of being long below that channel high is not worth the risk in my mind. So I can buy 6,800, that area there, if they find support, and I can buy any of the support below once it passes back through the opening price, but I would not be interested in buying it on the dip. That's a really important nuance. Now, let's say the market opens this morning and it immediately starts to trade higher. It doesn't come down at all, right? I mean, it's just short covering right out the gate. Everybody's like, oh my God, this is so bullish. We're going to all-time highs. And they just start buying and buying and buying and buying, right? They start exiting all their shorts really quickly. Well, then what I would need to see is I would need to see the market push above 68.22 and spend a lot of time and bring in a lot of volume up there. I am not interested in chasing the longs first thing this morning, which again, normally on a gap day, I would be willing to do, but this morning I'm not. So I would have to be really convinced that the market has support up here to be willing to go long. And of course, if we're live streaming at that moment, I will say so. But to me, the really only thing to do when the market opens is wait for it to pull back down towards 6,800 and then watch for support there. That's where the trade opportunity comes in if I'm taking a trade first thing in the morning. Otherwise, it's okay to just let the market do its thing for the first few hours today, because bigger picture, by bigger picture, I mean the rest of the day / the next few days, there's very big opportunities for this market. Okay. If after the first hour, whatever sort of shenanigans, whatever sort of chop, whatever sort of random reversals happen in the first hour or two, when those are over, this market is either going to start excess to the upside, in which case it'll be a great day to get long, or it's going to start working its way back down to the opposite end of balance. Now, again, I cannot predict if it'll head down that far today or if it'll take 2 or 3 days to get there. I also cannot predict if we're going to keep up the type of volatility we had last week. Last week, we had very large ranges, very volatile ranges. That may end. That might be over. This week, we might start having smaller ranges again. Okay. So I can't predict any of that before the market opens, but that's not how I make money as a trader. I'm not Nostradamus. I don't guess what the market is going to do before it does it and make trades based on that. What I do is I obsess over what is the market generated information telling me right now, and how can I take trades based on that? And if there is no information, if the market just gaps and goes and starts taking off to the upside super fast, I'm not chasing that trade. I would need to see the information of support up there to get long. If the market starts to pull down and it finds no support around 6,800, I can get short to fill the gap. Okay? Or if it finds support, I can get long for a gap and go at that point. But I need to see what happens either at the high from Thursday or that 6,800 area in order to be able to predict what will come next. Is there any questions on any of that from the chat? Let me know what you want to know. Good morning to Rich. Welcome. Pete the cat in the house. Bill is here. Good morning to you. Deborah in the house. Arjit is here. Dilbro. All good morning to you. Trevor in the house. Bob for short is here. Howdy, howdy. Will, good morning. Jason in the house. He says, hit that like button for the captain. Please do. I'd appreciate you. We got 84 people hanging out. We can get some likes. Should be able to get to at least like 40. At least half of you don't hate me. Percy in the house. Bonjour to you. Danny is here. Good morning. Bakawaka says, I'm wanting to get into Bookmap as a price action scalp trader. Where do I start? Well, first and foremost, I'm actually not the best person to ask about that. There'll be other traders that specifically focus on that can give you much better insights. Bruce will do a stream later on today. So I would definitely check out Bruce's stream and ask him that question. He'll be able to give you a lot more insights. But I will just tell you this. The main things that I use on Bookmap to give me insights about what I think the market is going to do over the next few minutes, over the next few hours, are the same things you would want to look at. Okay. And here's what I'm focused on. First and foremost, these little dots that you see pop up here. Okay. These are volume dots. And basically what these dots are showing you is they are showing you the delta between buyers and sellers. So the delta means if there's more buyers at that level, at that moment, it's going to be green. If there's more sellers at that moment, it's going to be red. Okay. The larger the size of the dot, the larger the imbalance. So this little dot right here meant there was a little bit more buyers than sellers at that moment. But this big green dot down here meant there was a lot more buyers than sellers at that moment. So that's going to be the first thing you want to learn, is how to read those volume dots. And here's what you want to understand. If you see a red dot at the high, that is resistance, right? That is somebody had, limit short orders waiting there. The market pushed up into those. They filled. Guess what the market's going to do next? It's going to go down. Okay. If you see a green dot at the low, it's support. It's a sign that there was somebody with limit long orders there. And as the market came to it and filled it, they got their fill, so the market's probably going to go up. But if you see the opposite, if you see a green dot at the high or a red dot at the low, that is a sign of a sweep of the order books. Okay, what does that mean? It means that somebody got short. So we'll zoom in a little bit so I can give you some more detail here. Somebody got short as the market was coming down here, and they put their stops up here. Let me switch colors. Try to make that a little more easy to see. There you go. They put their stops up above those previous highs. Okay. So they were getting short and they had their stops up there. The market came back up, but not really because it was super bullish and it was going to go to the moon, but just because it wanted to take out those stops. So poked up there and whoosh, it took out those stops real quick. Okay. That's why you have that green dot at the high, but then the market came down. So just use logic to think about it. It's always about how many buyers or sellers are at this level at this moment, at this exact second. Are there more buyers or sellers? If there's more buyers, it goes up a tick. If there's more sellers, it goes down a tick. So when you're saying to yourself, how do we have a green dot at the high and then the market goes down? The only way that's possible is if that was not new buyers getting long there, but instead were shorts getting squeezed. Okay? This is the first thing you want to train your brain to look at this chart all day, every day, and ask yourself, where are these volume dots? Are they green at the highs or green at the lows? Green at the lows, you trust as support. That market's probably going to go up, but green at the high, that market will die. That market will reverse back down because that was just a sweep of the order book. And oftentimes the market will go up just to take out stops and then it comes back down. And it'll go down just to take out stops and then it comes back up. That's what are called high frequency bots. And if you want to be a scalper that's taking fast trades, that's who you're trading against. You are trading against high frequency bots all day, every day, which by the way is the most difficult way to trade. But I'm not here to preach or tell you how to do your thing. If that's what you want to do, that's what you want to get good at, is recognizing, did the market just find resistance, meaning new sellers stepped in, or was it just a sweep of the order books? Okay. So what you will also notice is that if you sweep the order books, the market will reverse and head the other way, but it will oftentimes come back again and try it again. So if this had been a red dot up here, you would have expected the market could just keep going lower. But because it was a green dot, you expect it could come back and try again. Give it another sweep, which is, by the way, what we're expecting right now. All right, we're expecting it to come back up to 68.20. Again, as a scalper, not, longer term bullish, but to come back up there and try again. Because as long as it worked, as long as they were able to take out stops, those last times, they'll try it again. Those high frequency bots just keep doing what works until it doesn't. So if poking up to this level takes out stops and then they can get their reversal, they'll come back up and they'll poke it again and they'll poke it again and they'll keep poking it until they get up there and no stops get taken out. All of a sudden you start to get a red dot up there. Real sellers start stepping in, then it's over. Then what we call bot shenanigans or the chop and grind by those high frequency bots, then it's over. Okay. So that's the first thing you want to look at. The next thing you want to look at is the stops and iceberg setting. So they just canceled that iceberg that was at the high, but we still have this iceberg down here at 68.11. So the icebergs are very short-term targets for the market. They are a level where the market knows there's liquidity. That doesn't mean it's necessarily going to go straight to it. Okay. That it may or may not go straight to, a iceberg, but the market does want to come back to that iceberg. So for example, if the market were to start to push higher here and it's pushing up and it's pushing up and it's pushing up, but you see that this iceberg is still down here at 68.11, you should assume, again, you're a scalper in this scenario. If you're going long, you want to take profits real quick. Okay. Because that thing is probably going to come down at some point for this iceberg. Now, let's say you're doing that. You're taking little scalps to the long side. You're locking in those profits, right? You're keeping that in mind that it might come down and then all of a sudden it disappears. Well, now you can stay in your trade. Let that next one run because now the magnet to pull price back down is gone. And so if you're in a long trade and you were originally planning to take profits 3 points higher, maybe now you let it go 10 points, right? Now you give it more space to run because you don't have that magnetic pull that you need to worry about anymore. Okay, so that's the icebergs, and you'll see that with the two little green triangles. And then the next thing you want to look at is the stops indicator, which the way I have my settings set up, it's only going to be larger stops are taken out. So for example, when we poked up here, the volume dots tell us those were stops, but I didn't get a stop indicator. So it probably wasn't that many contracts that got stopped out there. Right here, green dot, but no stop indicator. So probably not that many contracts. Right here, though, these stops we can see were a big one. So somebody was taken out for 127 stops. right there. Somebody was short and they just got squeezed. That is really important to be aware of because that is where something can change in the market. Whatever's been happening can change. If the market's been balancing, which it has been in here, that could be the end of the balance and the market could start to rip higher from there. That could also be the sign you're going to reverse and come back down. But it's just a sign that this is a key moment to pay attention. Somebody large just got stopped out, the momentum is going to change. The same thing is true when you're looking at the order book and changes in the order book. So if you just look over here on the right side of this white line that runs right down here, this is the current order book. So this is where orders are right now. If you look at the heat map over here, it's showing you how those orders are changing, where those orders are appearing and disappearing, right? The change in color is the change in the amount of liquidity, right? The more red the color, the more liquidity, the more dark or black the color, the less liquidity. So that's the other thing you want to watch. When there's major changes in liquidity, there is going to be changes in price. So for example, right now, what's the major liquidity? If I'm a scalper and I'm real zoomed in here, it's above. What's the market doing? It's going sideways. So we should assume as long as this liquidity is above, we're going to keep playing this game. We're going to keep going sideways. But let's say all of a sudden this starts to disappear. This one disappears, and some big liquidity starts to appear below. Guess what the market's about to do? It's about to break higher. Okay? So keeping track of what is going on with that liquidity second by second and how it changes throughout the day, that's your next edge. Okay. And then the last thing that I would recommend is this tool right here, which is the volume pressure imbalance on the, what are these things called? Remembering the names of all this stuff is crazy. Anyway, the volume pressure imbalance on here, what that is basically going to do is that's going to show you those key moments where the market's order book is getting swept, where something is changing. When you see that get to positive, let's say above positive 90% is green, that is stopping out shorts. When it's the other way, it's stopping out longs. And so by keeping track of that, you can know when they sweep the order books. If you're a scalper, that's your bread and butter. Because when they sweep the order books, what is the market about to do? Go the other direction. So if you're watching the market go up, and then all of a sudden you see the sweep of the order books where, all of a sudden it's super red. Guess what? Or it'd be the other way. It'd be super green. They just stopped out a bunch of shorts. Now the market's about to come back down. And if it's going down and it gets super red, they just stopped out a bunch of longs and it's about to turn around and come back up. So you just want to be paying attention to all these little things. I would also suggest don't try to learn it all at once. Start with just the simple volume dots. Start with just the changes in the order flow, in the liquidity nodes. Okay? Get really good. Spend months just training your brain to recognize the changes. Then start to add more complexity to it. All right, the market is open. We got a massive gap up. We got a 60-point gap. Gaps this large often don't fill the first day, but they should at least try. So we are watching this area around 6,800 to 6,805 for support. Remember, I do not want to FOMO into a long trade this morning. Okay? I would have to see a lot of support up here above 22 to get long. I'd much rather wait for a dip down to 6,800 and look for support in there. Okay? And that's because of the longer time frame. So what do we notice as the market is poking up here above 22? Green dot, green dot, green dot, green dot. Stops. Right now we are just sweeping the order book. Anyone that's been shorting up here in the last few minutes, where are their stops? Right above that overnight high. So we're just poking up right now to take out those stops. What do we just discuss happens once we take them out? We come right back down through the opening price again. So that's why we don't want to be getting long up here until we see new buying up here and we're convinced it's going to keep going. Because at this point, the higher probability, we probably get one more little poke up and then we come back down through the opening price. Come on. Anytime the market has a gap like this, a gap up, we're obsessed with the opening price. Okay? Why are we obsessed with the opening price? Because that is where something changes in the market. As long as the market is above that opening price, it's a gap and go. It's a sign of momentum up. But as soon as we cross back through that opening price, guess who's starting to sell the market? The gap fill traders, the people that want to see the market come back to Friday's high. So as we cross through that opening price, it goes from being a little bullish above to being a little bearish below. And so that's a really important level to watch. And it can chop. It can just pass through it like a dozen times first thing in the morning, and it often does. But every time we're below it, we're a little more bearish. And every time we're above it, we're a little more bullish. And we're just watching what happens as it passes through. Do we start to get squeezes? Do we start to stop people out? Or do buyers step in? What happens as we pass through that opening price? So right now I'm looking for one more poke to the upside and then for the market to come back down through that open. And we will watch what happens when it gets there. Flavorino says, do a Bookmap demo. I think they have that. Yeah, there is definitely, if you go to the Bookmap education section, there's definitely stuff on scalping using Bookmap. And like I said, if you just wait for Bruce for his stream, which there'll be one later on today, he's a great person to ask about that. He'll be able to answer your questions for sure. J55, good morning to you. Danny in the house. He says, so the PM high and yesterday's high is the chop zone? No, there is no chop zone when the market has a gap. Gaps are different. Chop zones are just for when the market opens inside the previous day's range. When we open above or below the previous day's range, it's a gap day. And that means we're going to get one of two things. Well, one of three things. One is a gap and go, which means the market just immediately starts to go in the direction of the gap, which is what we have so far this morning. The other is a gap and chop, which is where it just crosses through the opening price a bunch of times, which is what I think we're going to get this morning. Market generated information hasn't given it to us yet, but that's what it looks like to me. And the third option is the gap fill, where the market comes back to the previous day's range. So there is no chop zone this morning. The chop zone is not in play. What's in play right now is a gap and go or a gap fill or a gap and chop. So this is that next poke to the upside. We are still taking out stops. So the poke isn't over yet, but I suspect we're going to run out of steam any moment now and come back down through the open. If I'm wrong and the market comes back down and it finds support here and new buyers start to step in, well, then I'll get bullish for gap and go. But that seems less likely in my mind. More likely as we rotate back down. So this is one of those moments where if I was a scalper, I could get long because it's a gap and go and we're above the opening price, but I would want to take profits quick. I'd only be wanting to grab, 3 points, 2-3 points at a time. I wouldn't want to be trying to get a 10-point trade here. You know what I'm saying? And if I'm a day trader, if I'm not a scalper, if I'm a day trader, I don't need to do anything right now. Because we talked about the fact that, this was balance for 1, 2, 3, 4, 5, 6, 7 days. So if we break out of balance today, we are going to get momentum. There'll be plenty of opportunity for hours and hours and hours. It's going to keep going higher. There'll be lots of opportunities to go long today if this is a breakout of balance. But so far, we have not seen evidence of that. We either need the pullback to 6,800 and support there as evidence, or we need to see new buying up here as evidence. And until we've seen one of those two, we should not be Nostradamus. We should not be predicting it's going to successfully break out. We should wait for the market to tell us it's successfully breaking out through its perspective. Dope Angel says, can we take a look at the queue? Yes. Let's just watch for resistance here real quick, and then we'll take a look at the queue. Okay, market definitely running out of steam here. So what do we see? We're still getting those green dots at the high. So they are taking out stops, but less and less each time. We can see here they took out 80 stops, 60 stops. Here, not even enough for the stops indicator to pop up. Right? So it's still working right now. They keep poking up, but there's fewer and fewer shorts to squeeze the higher they're going. So to keep it going, what do they need? They need new buyers, which I don't think we're going to get. Let's take a quick look at the NQ. Okay, let me take a look at the NQ on the daily as well, just for context. Yeah, NQ not quite as clean as the ES in terms of that channel. So it's hard to say if they're breaking out of the channel or not. So let's just take a look at on market profile. So for the NQ, what you're looking to see now is, can they turn this overnight high? This area right here around 25.5, 66 to 570. Can they turn that area into support? If they can turn that into support, it's bullish as a gap and go, and the target becomes the high from Thursday at 25,686. If they cannot turn that into support, boop, they're coming back down through the opening price, and then you'd be looking for support around 25,486. So both markets are a gap and go right now, but remember, this is short covering and FOMO buying. This is chasing of price. So it's okay as a scalper to be going long here, but not as a day trader, okay? Because this thing is fixing to flip and reverse on both markets any moment now. And as soon as it does, it'll be right back at that opening price. One thing I noticed last week was, or I would say almost the last 2 weeks, has become like a short-term sort of habit of the market, is it tends to do this first thing in the morning. This has been a pattern where it just like, it opens and it just goes. And it gives you no pullback, no chance to get in the trade. It keeps going way further than you think it will, and then it completely retraces it, an hour or two into the day. So you start to say to yourself, all right, how do I want to play that? If I'm recognizing a behavior that the market is doing over and over again, do I want to try to trade into that behavior? Do I want to assume if the market opens and starts going up, it's going to keep squeezing people and keep going higher and higher and higher and just get long? Or do I want to step aside and just say, listen, this is weird. It's happening over and over again. It doesn't really make sense. I don't want to trade it. And each person needs to figure that out for themselves. So here come the high frequency bots trying to get everyone long at the high. We can see that because they're stacking up those icebergs. They're telling you want to chase this. You're going to miss it. Get long right here at the high. But you know better. Because stuff like boink, that happens. High frequency, do. High frequency, they'll squeeze you on both sides. Okay. So for the first time, we're now starting to get large nodes of liquidity stacking up below price. What did we talk about earlier? That's when you start to get a feeling that things are changing. If liquidity starts to disappear, if so far this morning it's been liquidity above price over and over again and nothing below, and then all of a sudden it starts disappearing above and building below, that's when things are getting ready to change. That's when the auction is about to flip in reverse. Those high frequency bots have felt like, okay, maybe we've got everyone long up here. Now it's time to reverse. So we got the new liquidity below. Now we're looking for these nodes right here at 68.40 and 68.35 to vanish instantly. And then watch the market reverse. I would say if you wanted to go long here for the gap and go, you could. You would just want to use a very tight stop. And as soon as you are in the profits, you would want to move that stop above your entry because they are fixing to reverse and timing it is very difficult. All right, I stand corrected. They're going for another poke to the upside. Why do I say that? They were able to take out another 200 stops with that last one, and they had this iceberg down here, and they just got rid of it. So they got rid of the magnet to pull price down, which means they want one more push up. This right here is straight up high-frequency bot shenanigans. They're trying to get everyone to go long up here. And I just love watching it because it's like you just see what's happening. And you know what traders are feeling. They're feeling like, I'm going to miss it. I have to get long. And then just like that, they all get squeezed. All right, there goes the liquidity above. See how it's disappearing? Right? This was dark yellow before, and now it's turning to pale white. And what is market doing? Coming back down towards the liquidity they put down there before. So if you're a scalper, this is what you want to become obsessed with. Watching those lines change color. Okay, so there's a potential that we could turn this area around 68.22 into support, this area around the overnight high. You know, you poke above the overnight high, you bring in new buyers, you can definitely keep it going. So that would be that, you know, the opportunity for the dip buyers to buy a dip here. If they don't, we're coming back through that opening price and we're likely heading down towards 6,800. So this is where we're watching. This is where I said I could only go long on a gap and go this morning if they turn that overnight high into support. This is their chance. So we are looking for a bounce here around, 21 to 24. If they can hold it, we are bullish for continuation to the upside. If they can't, we're looking for a dip. Man, the questions are piling up. Market Pulse. Yes, thank you. That's the name of the indicator on the bottom. There's a question here. When do I live stream? Thank you for answering that. Alosis. So I live stream every day for the first hour, Monday to Friday. There's a link at the top of the page, piratrators.io/join, if you're interested in joining. There was a question from Zap in the Bookmap that says, is there any way to see gold futures on this app? And Trader says that's a good question to ask in the general chat. Yeah, so you can look at any asset that you have a data feed for in Bookmap. So you can just pay for gold futures and you'll be able to look at gold futures in Bookmap. What you have to understand is every asset functions slightly differently. Okay, so gold futures won't look the same as ES futures in terms of the amount of liquidity and even the behaviors, particularly intraday. But whatever asset you want to trade, you should look at that chart all day, every day, and just become obsessed with how does the order flow change on that chart. Whatever it is, whether you trade a stock like Tesla or something like that, an individual name, or you trade the index, or you trade the futures, or whatever it might be, you want to look at that and study how the order flow changes on that and not overdo it. Not look at too many things because then it gets confusing, particularly when it comes to order flow, because there's a lot of fake stuff in order flow, right? There's a lot of what they call spoofing, where they make it look like they're going to do something and then they disappear it, right? So right now there's a bunch of liquidity right here there you go. Well, actually this one's filling. So this is an exception to what I was about to say. But a lot of times what will happen is you'll have a huge node of liquidity and the market will come down. And then right as it gets to it, it just disappears. It's like whoosh, it's gone. And so that's just part of what they do. It's one way those high frequency bots can manipulate the market to get their best opportunities. So you want to become very, very good at reading the order flow of whatever asset you trade, because there's going to be shenanigans. There's going to be fake outs, and you want to know what those look like when you get them. Okay, so here's that moment of potential support at the overnight high. Do the buyers step in and reverse things here? If they do, we're bullish for the day. If they don't, coming back down towards 6,800. And what don't I like about support here? The fact that there's an iceberg. The fact that there's still a magnet sitting there saying, yeah, it's cool, bro. You could go up, but you're going to have to come back down because I got a lot of liquidity here and I'm not done filling it. Oh, they just canceled it. That's good. Good for the bulls. Oops. Come on. David Cooper says Charles does a checklist of sorts, exits that we should mentally run through before committing to a trade. And likewise, there's a mental checklist of things we should do to know when we're fucked up. When we effed up. Yes. So the key to trading in my mind is to know where things happen on the chart and what to expect to see there at that level. So you guys know what I'm talking about so far this morning. Support right now at the overnight high means it's going to keep going up. No support means it's coming back down through the opening price. Crossing through the opening price means we're liquidating all these buyers and we're coming back towards 6,800. So I'm looking for support. If it holds, I'm going long with my stop, inside that range. If it crosses back through, I'm getting out of my long. And then if it crosses through the opening price, I'm getting short to come back down to 6,800. I'm taking profits there because that's where I'm looking for support. So you got to know where these levels are, right? And know what changes to expect to see there. You're not going to be right 100% of the time. I'm definitely not. But if you know where the business takes place, you have an enormous edge because a lot of traders don't. A lot of traders just see the market going up and they buy, or they see the market going down and they sell. A lot of traders got long up in here on that first push up because they didn't recognize the behavior. They got squeezed on the way back down. And now what are they going to do? Now that we're back up here again, they're going to chase. And so then guess what the market's going to do? It's going to come back down again. It's going to squeeze them again. It's like, this is what the market does. And so if you know where those key areas are, if you know what behavior to look for at those areas, that's where your edge lies. And so what I do with the brigade is I send out an email every morning with whatever levels pre-market I think is important. And then throughout the day, I talk about what's happening at those levels. Is it holding? Is it not? Should we be trusting the support to go long, or should we let this one go? Speaking of which, right now, I would let this one go. This is support at the overnight high, which is bullish, which does mean the market wants to make another move to the upside. But I just don't like the way it feels. I don't like the way the liquidity in Bookmap just completely disappeared. Think about how much we had before compared to how much we have now. Much, much less. So I think they're just trying to get you long right at the high again. And then what are they going to do? They're going to come back to that overnight high again. These high frequency bots will do what works until it doesn't. Squeeze shorts, squeeze longs, and now squeeze shorts. Okay. So here's how I'll give it to you because I got to end the stream, unfortunately. Here's how I'm going to tell you to handle the rest of the day moving forward. I would say I am bullish as long as we are above 68.21. Okay. I do think we're going to poke into it again. I do think we're going to poke into this overnight range one more time. But if they hold it, if they hold that support, then I'm bullish for this thing to start trending to the upside. If they do not hold that support, there's a very high probability they're coming through the opening price, which is 68.15. Okay. Now, what will happen when we come through that opening price? Let's just use logic. What has the market been doing prior to this moment? It opened, it pushed up, and we have done nothing but spend time and bring in volume up here. So that tells us more people are buying than selling up here, because obviously if there were more people selling, the price would have turned around and come back down, right? So right now there's new buyers. intraday this morning buying up here. That is bullish, which is why we'll be bullish as long as we're above that overnight high. But if we come back through the opening price, where do you suppose all these longs buying the market right now, where do you suppose their stop is? Probably below that opening price. So once it comes back down, that's where you start to liquidate and squeeze the buyers. So very simply put, I'm bullish above 21, bearish for a pullback to 6,800 below. And I think we're probably going to grind on here for a few more minutes before we make a break one way or another, because it's working. Because going up is taking out shorts and coming down is taking out longs, and it's still working. They took out 58 shorts on the way up. They just took out another 85 longs on the way down. And as long as it keeps working, they are going to keep doing it. And that's valuable information for us to carry forward. With that, I must say goodbye. Thank you guys so much for watching. If I missed any of your questions, because there's a lot that I did not get to today, I apologize. Feel free to head into the Discord and go to the Futures-Charles tab and just type out your questions there. And I'll go in later on today and I'll answer each one of those questions one by one. Otherwise, you could just come back next Monday and hang out with us again in the live stream. If you are not a member of the brigade, I would highly encourage you to join. It's only $20 a month. That's less than 2 ticks on the ES. Okay? I promise you, if you listen to my advice, if you read my email every day for a month, I will say something to get you in a trade where you'll make 2 ticks of profit. That's half a point. Okay? Or I'll get you to avoid a trade where you would lose 2 ticks, and then the membership pays for itself. Okay? We'd love to have you. We're always trying to grow the brigade. Bringing in new people brings in new ideas, and it also gets me to answer questions and talk about things that I normally don't even think about because, I taught it years ago. So we'd love to have you join, and you got to go to piratetraders.io to sign up. If you are a member of the brigade, head on over to the live stream. Let us set sail. Again, everyone, bullish above 21, bearish for a pullback to 6,800 below. Don't forget about this iceberg. This has been here since before the market opened at 6,810. So even though we've got momentum up, we've got buying, the market knows there's liquidity if they come back down. And that liquidity is both that iceberg that wants to fill and squeezing all the buyers if they cross through the opening price. So it's okay to go long, but don't fall in love with that trade. Move your stop quickly, take profits quickly, because at some point, this thing could go boop, boop, just like that. Thank you very much. We'll see you next week.